Hello, my name is Ben. I am one of the CPAs here at Lease, and I would like to talk to you today about one of the free tools that we offer for people who are working on transitioning their lease portfolio from the old rules under ASC 840, IAS 17, and the legacy GASB lease standards to ASC 842, IFRS 16, and GASB 87, respectively. This is the present value tool. So in this video, we will talk a little bit about why this is important, and then I will show you how to find it on our website and how to use it. So the main idea behind these standards updates is related to transparency and comparability. As we know, many leases from the lessee or expense perspective were previously designated as operating and very simple to account for. You would just record a cash payment and a corresponding lease expense each month that you made a payment. And this has changed because if you really think about the nature of these operating lease agreements and their transactions, entities are not just spending cash for something, they are obtaining control and economic benefit which relates to their day-to-day business operations from a specific tangible asset. So a good example of what we often use is Delta Airlines. You may not know this, but Delta, who is headquartered in Atlanta, just like Lease, they don't actually own the majority of their planes that they use to conduct their business. They actually lease them. So in 2017, Delta had a balance sheet with $53 billion worth of assets and about $38 billion of liabilities. And this was located at the very start of their financials, the balance sheet, in their annual SEC filing or 10K. And 23 pages further down this document in the footnote for leases, which disclosed over $16.5 billion of future lease commitments that are required for Delta to be able to continue the normal operations of their business and run the current fleet of planes that they have. So for investors to make better use of these financial statements and deciding which companies to buy stock in, it would be useful for businesses to disclose an asset and a liability on the balance sheet for all of these items, which actually do behave from a business perspective like assets and liabilities. So after the public companies all complied with this rule change in 2019, it was pushed down to all private, international, and government entities who report externally. Instead of just planes, businesses will need to represent assets and liabilities for all operating type leases and the current capital leases as well, but things like office space, equipment, land, vehicles, copiers, trucks, and the like, pretty much anything that they don't have something other than a lease agreement for their day-to-day business operations. So the good news about this is that since these contracts are committed to over time, usually over more than 1 year from now, we can deflate the balance sheet impact a little bit by using a discount rate and representing the asset and liability values at their current present value. So this present value tool, which I'm going to show today, allows businesses to get a sense of what their balance sheet impact will be under the new standard if they know both their cash flows and their discount rates. So now I will jump into screen share here and show you guys where this is on our website and how to use it. So this is the leasequery.com website. And if you go over here to resources and just hover over that, there's a few different options, one of which is free tools. If you click on free tools, there is a myriad of different things in here that you guys can use in the initial kind of exploration phase of what to do and how we can help with any of the new lease standard adoptions. But one of these in particular is the present value calculator. So if you click on this, it'll take you to a little page that summarizes what it's supposed to do and how it's supposed to help for a little bit. And then if you put in your email, you can download it. I've already done this, so I've got it pulled up right here. And what I'll show today is just what this is showing, what the limits of it are, and how to actually use it. So there are blue highlighted boxes in here, which tell you those are the fields that you can actually edit. And there are really only 3 inputs that are needed, which is how many periods is this going to be over? So if you had a 4-year lease agreement, which was paid each month, for example, you could put in 48. And then if you click refresh, there is a macro in here that will expand the cash payments out to 48 periods so that you can have the opportunity to represent what the cash payment is each month over that time. And then you select that your periods are either months or years. So in this case, months, and whether you make the payments at the beginning or end of each period. So if we paid on the 30th or 31st of each month, we would pick end. And then we only need to pick a discount rate, which is something that we have a free tool to help determine, or many articles and blogs to help get a little further into. I could probably talk about this for quite a while just to figure it out, but for now, we'll take something close to like an incremental borrowing rate or something that a bank would offer for a loan over 48 months for a similar amount of money, which could be, say, 5%. And we'll put that in there. And then after that, you just come up with what the cash payments actually are. So if this were a very simple $1,500 per month payment for whatever it was that we were renting, we could drag that down and then have 1,500 in every one of the blue cells here, which represents the actual times that we're making cash payments. And then this part of the tool will list what the present value is of each of these payments individually. And at the bottom, as well as up here at the top, it'll show what they actually are in the aggregate. So again, if you just want to have a general sense of what your balance sheet impact will be under the new standard, as long as you know your cash flows, which go here, the discount rate, which goes here, and the number of periods, which is up top, then we can tell you what the opening asset and liability balance are likely to be very close to. One thing to point out is that this calculation cannot be any more precise than monthly, but in our full version of our actual tool, if you want to put your lease data in, we'll give you all the calculations down to the individual day. But that's something for another time. So essentially, this is the present value tool, and this is how it's used and where to find it. Keep in mind that this is one of many free tools that we offer to help companies in their initial assessment of lease information. If you think you may need more help in the form of a software solution, that is our business. So if you would like to reach out to us at any time, we can put you in touch with any of the other CPAs, such as myself, to walk through your portfolio and your needs and see if it could be a good fit. But in the meantime, please use any of the free tools that we offer as much as you would like. Thanks.